Okay, good boss. Appreciate it.
Hello, everybody. Jim Malone here, coming to you live on Jealous Trading Floor. Well, the Fed raised the rates 0.75%, and it has tanked the market, and we have moved from a confirmed uptrend to an uptrend under pressure. So here's what I'm doing, and this is a can slim way of doing it. You need to reduce your exposure. I've been reducing my exposure today. Basically to no more than 50%. Mostly you want to be in cash right now. And currently, I do believe that the tech sector is going to be hit hard, but there are going to be some hope probably in the oil sector because the price of oil is related very, very closely to the price of the dollar rate. So as the dollar strengthens, which it will because of the increase in the interest rates, the price of oil will also strengthen because it is essentially a cash equivalent. And so if you do, I've been reducing, I'm pretty much all in oil stocks, even though they did pull back a little bit today. They're the ones that are going to probably be the best going forward. BP currently has a price to earnings ratio of about 4. So that's something, that you might want to consider getting in. Buying that, and also I have a fairly large position in Exxon as well. So that's another one that should do fairly well in this environment. So basically, also, you need to start to reduce your market position if you haven't already. Frustrating market again, but we're definitely moving to a uptrend under pressure. And of course, if you're using the ETF strategy, that is basically you want to be moving out of any of the index funds into about 50%. So if you do have the spider and you're using that as your index fund, you want to probably be selling half of that, going to half cash and half index fund. Now, if we take another leg down, then you want to probably just go to all cash. And that is sort of what it's looking like today in terms of the market. So not the funnest thing in the world, but we kind of expected it a little bit because we did get some weakness yesterday. If you want to get my ready list, and of course what the ready list is all about is these are stocks that are setting up, and that if we do go back to a confirmed uptrend, then these is where you want to be looking for potential buys. And it's super easy to do. I put that up on the screen, https://senfox.com/LP1R7XYZ. Now, kind of a weird thing, but this is a link shortener. So what it does is it lets you see the link to my list. So very easy. And I'm going to put that up here as well. That's the subscribe to our list. There it is. Oh, I got the wrong one. There we go. So the ready list, that's the one. It's another address, but it goes through a little bit different, thing. But they're both valid. So I'll keep that up on the screen today as we go through everything, so that you can definitely get a look at it. I reduced my position. I sold the UPRO. Of course, that is the index fund that's a 2x of the spider, and I'm out of that. I did make a little bit of profit, not a lot, but when the market changed, we had to vamoose from there. I'm in Exxon. Of course, I'm down a little bit on that today, about 2%, but we've been riding that up since about 90. We were in there at about 95, so that's looking fairly good. Volume was down on that. I do think that we're going to see a recovery in the major oil companies in the probably tomorrow or towards the end of the week. AMSL Holdings, I did sell most of my holdings in that. This is the company that makes the lithography equipment that's used in the very highest tech chips. It's the only company in the world that does the deep UV, and of course it's got export controls on it, but I did sell it today. It's a Dutch company. We are slumping a little bit on that one as well. We're down. So following the 7% rule, we never want to take any more than ever a 7% loss, and that's my rule. We are out of that, at least for now. XLE, this is primarily Exxon and Chevron. This was down as well. but about 2%. And of course, BP. This is one that's down a lot less. It's down about 1%. This is one I would consider adding to here. I did make a little bit of an add to it today. BP. It's got a price to earnings ratio, and I know normally with growth stocks we don't like to trade this way, but with value stocks, with the oil stocks, you want to use the price to earnings ratio. It's got a price to earnings ratio of about 4. So currently, if you were to buy a share at $30, it's going to return about $7 every year. So very strong there. And I do believe we're going to see a rise in the price of oil. We also have a diesel shortage out there as well. So not exactly the most exciting things to talk about today, but let's get into it. I want to show you the price chart for crude oil, and that has been. You're going to start to see that firm up today a little bit, as it was previously. It's previously been down, but it's starting to make its move up. This is what I'm talking about with regards to the strengthening in the dollar value. When dollars go up, you're going to see oil prices go up too. Part of the reason, of course, is because outside of the United States, we can print the dollars, but outside the United States, they have to sell something in order to get those dollars. And of course, dollars are the currency for oil. So when people sell oil, they're going to get dollars. This is a way you can print dollars by selling oil. So we're going to see some strength. Probably we're going to see the price go up a little bit. West Texas Intermediate 88.37 currently, and as you can see, it's been coming down, and now it's starting to bounce and starting to move up. Back in June, we were all the way up at 123 for West Texas Intermediate. It looks like we're going to bounce, and we're going to start moving higher now. So that is looking what it's looking like, and that, of course, will unfortunately exacerbate inflation. So there you go. All right, so let's get to some of the questions. Thank you so much. By the way, if you are looking on YouTube, I'm on YouTube, of course, LinkedIn, and Instagram, and Twitter, as well as TikTok. You can just jump on over to the comment section. I have put the link to the ready list in there, so if you're interested in that. All right, Charles is looking at the QQQ. Let's take a look at the Qs. Of course, this is the QQQ is the NASDAQ 100. So this is a very tech-weighted index. This is a ETF, exchange traded fund, and it follows the NASDAQ 100 largest stocks. And now this is where, of course, Microsoft is, and Apple, and all those other stocks that are tech-related. They've been doing very, very poorly, as you can see. We did move down after hours. We're down 3% on the Qs, and another about 0.15% on the others. So we're moving down. We're moving lower. Now there is a low point here in the Qs, 254, which I think is where it's headed, and we probably will get another leg down here on the Qs. So that's kind of what it's looking like. Let's take a look at what Sandeep is saying. Thanks, Sandeep. Appreciate it. Can we start shorting Tesla? Tesla. I'd like to short Tesla very, very much. I think we're getting to the point where we can short it. I think, though, a better bet on that action is going to be to short something that is a little bit more interest rate sensitive. Now, here's my thing about Tesla. They're still selling most of the Teslas. What I'm looking to short is Costco, because I think that it will be probably a very good short as well. And I did short this earlier when we had a retreat like this. I'm probably going to be shorting this one tomorrow. Let's pull over to the Costco chart here. And for everybody on TikTok, I'm going to jump over to there. There we go. Okay, so here we go with this is the Costco chart. Let's see if I can zoom in a little bit there. There we go. Here's the Costco chart. Here's why I like this one as a short. We've come up, we hit the 200-day moving average. We've pulled back. We've now tested the 50-day moving average, and we're down below the 21-day exponential moving average. So I do believe if we get a dead cat bounce tomorrow on Costco, it will be a very good short. Currently, it's up a little bit. This is probably a good place to short it. 484.39. I do think they're going to have a poor fourth quarter. That's what it's looking like. And this is, I believe, an overpriced stock. It's a very good company, of course, but the best shorts typically are in companies that have been high flyers very, very recently. Just back in August, Costco was selling for $5.64. So I did short it a little bit early. I shorted it in September, then I closed my short. Did make a little bit of money, but I think that this one is going to be a better short coming forward. So I am looking possibly to short Costco. Haven't done it yet, but I'm looking to short Costco. All right, let's take a look at to see if we can short Tesla, and that's the one I want to look at carefully here. TSLA, of course, is the symbol for Tesla. And let's look at Tesla. There are some issues that I have in shorting Tesla, and one of them is it's a bit of a it's first of all, it's relatively hard to borrow this stock. Of course, as you know, when you short a stock, you borrow from your broker, you sell the stock, and then you wait for it to move lower, hopefully, and then you buy it back and you cover it lower, and of course, hopefully, the difference is a profit. But here's the deal with Tesla. It's moved up very nicely to the 21-day line. If you were to short, and this would be the place, I do kind of agree with you, Sandeep. This may be, potentially a place to short, because the short would be, I always like to short when it moves to the 21-day moving average, and that's right, this little green line here, and it's definitely moved up to there. It's pulled back, got a relative strength of 18, which makes Tesla basically in the bottom 82% currently of stocks. So its performance is not very good relative to other stocks in the market. So we possibly could. This is, I kind of would like to, the one thing about Tesla is that there's support at 200. There's support at 200, and currently it's at 215. So if I did short it, I probably would not. I would probably cover it about 200 or about 195. So I definitely think there's some support there. You possibly could. I don't know if I will be shorting it. I'm more looking at the retailers. That's sort of where I'm seeing the most. That's where I'm seeing the most weakness in the market, is in the retailers, and some of them are overvalued. Costco being chief amongst those. So kind of interesting. All right, thoughts from Drunk Squidward. Thank you very much. Looks like my camera's on. Okay, let's see if I can get it back. Sometimes, it's funny. I have this issue with sometimes my camera. There we go. So we get the camera back. There we go. Okay, we're back. Thoughts on Boeing? Let's take a look at Boeing. And Boeing used to be, and I think it still is, the biggest exporter from the United States. But again, it has not been faring well. The Dow has been, of the three major indexes, the S&P, the Dow, and the NASDAQ, the Dow's been faring the best, but of course there's only 30 stocks in the Dow, and Boeing's one of the biggest manufacturers. It did actually tick up today with a but after hours it's down. So this also, I think, is probably going to go lower, probably down here to about the 120 level. So this is also potentially, potentially a short. Now I probably, when I opened it, the last short I did on Boeing, this is back here in April. I shorted it there, and I wrote it down basically to the bottom of the consolidation at about 117. So I was in it from about 155 down to 117. This time, I don't know if it'll be as steep a drop, but this one potentially also could be on your list to short, because I don't think this one, let's just take a look to see if they're going through earnings. Let's just take a look here. Okay, they were up on their last earnings, 4% sales, but they were down overall. This is a money, believe it or not, they are money losing right now. So this one also might be a candidate for a short. All right, let's look for Charles on the S&P. Let's kind of compare the S&P with the other major indexes, and let's put that up there. It's 0 S&P. There we go. There we go. Okay, so this is the S&P here, and what I'm doing here now, and you won't be able to see it right away. You'll be able to see it at TikTok right away, but not on not on the other side. But I'm going to move it over to there. So let's look at the S&P from basically July, and then let's also put in to the mix. Let's put in the QQQ and the DIA. That's the diamond. That's also the Dow Jones ETF, the index ETF. So if we're looking at all three of those, get it back to. I'm pulling up the comparison chart right now. There we go. Okay, so this compares the three major indexes, using their ETFs, using their index ETFs. The Qs, of course, are the least well performing since July. We're basically down about 6% on the Qs. On the S&P 500, we're about even, a little bit less than even, about maybe 98 in terms of that, so down about 2%. And the only major index that has been up in the last, since July, is the Dow. It's up just slightly at about 4%. So that kind of gives you a look-see at the S&P versus everything else. So currently, the top performing index out there is the Dow Jones. And of course, there's only 30 stocks in the Dow. So, but I suspect with this interest rate hike, we're going to see the performance on that decline as well. One of the other stocks I want to take a look at here, let's just see if I can put that in there, would be to see the performance of the Spider Select Energy, XLE. And yeah, and of course the XLE, if you look at the same thing during the period of time. Now we did pull back today. That since July, that's appreciated 25%. So really, you can see all the action in the market really has not been in the general stocks. It's been in the oil sector, basically the oil sector alone, and that's primarily because of inflation. So as the dollar strengthens, so too will the oil sector, just because, of course, that's what people use to buy. That's what dollars are. The way people get dollars outside of the United States, if they don't print them like we do, is that they sell oil into the market, and that gives them the access to dollars. All right, Sandeep again. Thank you very much. It's great. It's a great insight about Costco. It looks like a better short than Tesla. I think it is. Part of the reason I think that the short on Costco looks so good is because it's been such a high flyer, and I do believe that with this inflation, we are going to see a big pullback in terms of spending. And of course, the thing about Costco is that it has relatively thin margins, and and they're going to have supply chain issues related to oil and gas. So remember, everything comes to Costco on a diesel truck, and diesel fuel is right now in shortage, and so everything across the board at Costco is going to cost more, and that's, I believe, going to reduce the sales. So that's just my opinion on it, but I think that we could probably get a very nice move down on Costco. It's easy to borrow too. It's not like Tesla. Tesla's a tough stock to borrow just because people won't lend it. But if you'll notice, we did have a 15% increase in sales here. This is the last quarter, but only a 8% increase in profits. I think that this next go round and their next earnings for Costco is going to be on the 8th of December. Now, here's the thing. If I did short this one, I probably would not be holding it past the 7th of December, because I do think that if they do have a surprise here, this will wipe out a short. So you want to be careful, but I think you could definitely short this one as it's come up very nicely to the 50-day line and then down to the 21-day line. 21-day line is a very good place potentially to short something, especially a former high flyer. So thank you for that comment. Really appreciate it. All right, let's see. Okay. Hot girls for you. Excellent. Okay. More hot girls. Somebody just got, oh, wait a minute. I'm trying to get to all right. Let's look at, for Charles, let's look at VIST. Take a look there. See if we can get something working there. VIST. And wow, look at that. That's Vista Energy, of course. And it is a exploration company in Argentina. Interesting. You know, this one's definitely going to work very well because it's because it's in Argentina, of course, the dollar is very strong against the Argentine peso. So any oil that they're selling is going to do very, very well. So the cost of production in Argentina is going to be one of the lowest in the world. Currently, $13.99 a share. I like this one. Definitely like this one. So if you want to go long, this is kind of the definite thing to look for. Look at that cash flow, $2.75 per share. This is a price to earnings ratio, unbelievable, of a 1. I can't believe that. This is going to have very, very large dividends like some of the other stocks. Very interesting here. I definitely would like to put this one on my list. This is my personal watch list. So I'm gonna put that on my personal watch list because I really like that one. And it looks very, very good as one potentially to go long. Now, obviously, this is a long and not a short here, so just wanted to indicate this one. This is a Argentinian company, very interesting. And thank you for bringing us up, Charles. We really like this one. This is definitely a good one. I put this on my personal list as this one may just be what the doctor ordered. So very interesting as well. All right, Go Video. Love Go Video. WFC. Let's take a look at WFC real quick. WFC. And that's Wells Fargo. My general feeling about some of the banks, especially the money center banks, is to watch out. They have a lot of problems with their reserve requirements right now. It is moving up. Typically, higher interest rates are better for banks, but I'm just a little bit concerned here with a lot of things that are going on. It's just a 13, it's just 11 price to earnings ratio, so it's definitely getting in line with some of the other ones. But would I be a buyer of Wells Fargo here? I'd be a little bit careful with Wells Fargo just because of this market. I think we could be heading lower with Wells Fargo. So probably not one that I would be looking at right now. So let's go to somebody from TikTok here. Thank you very much. Let's see. Carnival would be a better short. Well, the problem with Carnival is a short. Carnival. The part of the reason that you don't want to short Carnival is because it's already so cheap. It's interesting. You know, you would think you would want to short the most broken down. You would want to short the most broken down, but I disagree with that. So let's take a look at CCL. This is Carnival Cruise Lines here. Let's take a look at this one as a and why I probably would not be shorting this one. Come on, there we go. All right, this is currently at $8. There's just not a lot of place to go here. The maximum that you could make would be the furthest to go to 0. So you can make $8 on this one. Not a lot of money that you could make on this one. I'm not saying that it won't probably go lower. It's definitely trended up and it's pulling lower. But this, you know, the problem with shorting a stock like that's already at $8, there's just not a lot of meat left on the bone. And with Costco, there's a lot of meat left on the bone. It's a $500 stock. It could easily go down $100 a share, and it went down $15, I think, last week. So it definitely could move down a lot more. So that's what you're looking at, really. You're looking at the potential of dollars. When you're shorting, you're looking at the dollars that it can lose. And we go over here to Costco, COST. It's essentially pretty expensive stock. And now let's go over here to the daily. As you can see, currently it closed at at 438, and then it was up a little bit in the after hour trading. But this one easily could go down to 450, and of course that gives us $30 that we can make right there by shorting. And since we're borrowing shares, this is a as long as you have as long as you have the margin, you can easily do this. So this is why I like this one better than Costco, than Carnival Cruise Lines. But I definitely think Carnival Cruise Lines is probably going lower, but it's already at $8, so not something not something great here. All right, what do you think the bottom of SPY? When do you think? When do you think the sun said it would be 320? This is what I've been talking. This is what if you've been listening for any amount of time, you know that I've been looking at the bottom of the spider at being about 320, and I thought I had egg on my face before, but it seems as if that unfortunately may be the case. It's starting to move lower. I definitely think we could see there is a major resistance at 350, but I think this could easily move to 320, and I think that might happen by the February timeframe. So that's kind of what I'm looking at. That's kind of what I'm looking at there. So, but great stuff. Now, by the way, the ready list is for. I wouldn't buy anything off the ready list until we get a confirmed uptrend. We're not in that yet, unfortunately. We're still in that downtrend, so I'd be a little bit careful with that there. So it's kind of just unfortunately for grins right now because we did change from an uptrend, confirmed uptrend to an uptrend under pressure. And of course, when that happens, you want to be at least 50% in cash. You just want to be at least 50% in cash. All right, everybody, thank you very, very much. If you want to, please like the show. Definitely helps us out because, we gets us out there to a lot more people. Oh, Charles has one last one. NBIX. Let's take a look at that real quick. Oops. NBIX. Is that right? Oh, NBIX. Let's see if I have that right. MBI. Oh, it would help if I didn't put that extra. There we go. Nocturne Biosciences. Very nice pattern. Very nice chart here. It's definitely pulled above the 113.63 buy point, and it's pretty strong. Unfortunately, I just don't know enough about this. They just came through earnings. It looks like earnings were excellent, and that's definitely a reaction to earnings. Let me go over to the fundamentals on this chart and see if we can find anything that we can look at here. And it does look like there is something where we can. Okay, so very, very nice earnings. Just came through earnings. Sales are up 31%, but profits, and this is the key, 69%. Still pretty high price to earnings ratio, and obviously this is a bio, so it's going to be higher, 53 on that. They're producing about $2.25 a share, so looking pretty good. Lots and lots of funds in this one. 1,171 funds in this one. So this one does look good. I just think that you're better off though, especially in the bios. There's so many of these. This is the most common area outside of, I guess, enterprise software. You're probably better off buying the BIB. I want to look at that just real quick. This is the ETF that covers the bio area. Okay, it's moving up a little bit as well. So, okay, I have to say that probably, yeah, I mean, this one looks good, but I probably would not be a buyer of this one. Let's look at. Oh, the NASDAQ. So let's get the right one up there. This is the BIB, which is the ETF that covers which covers that. So there we go. Okay, good. Well, let's get out of that and go back. Okay, so if you're not already a member of the Action Trailers, of course, please do that. Also, the ready list, I have that on the screen. And if you could, go ahead and like and subscribe, especially if you're on YouTube. Really appreciate that. If you would do that, helps me out so much on that. So hit that like button. Also, of course, if you're not already a member of the Action Trailer, it's very easy to do. Just go to www.Dallas Trading Floor. I'll be back tomorrow at 5. Everybody, happy trading, and I hope everyone's going to. What you want to do in this kind of situation, you want to be at least 50% in cash right now. The market conditions has changed, moving from a confirmed uptrend to an uptrend under pressure. So we don't want to be exposed to the market any more than about 50% right now. And we will be back here tomorrow.